Hello and welcome to the Strategy of the Week for Friday, July 19th. You are listening to Dan Misch. I am the Director of Retirement Services at VectorVest, and I'll be taking us through tonight's presentation. I originally did a Strategy of the Week at the end of May using Master Limited Partnerships combined with our Master Stock Ranking Indicator of VST. And as we stated, we had a lot of calls and emails regarding that strategy. So tonight we're going to revisit it with Master Limited Partnerships plus VST Part 2. And we're going to go about answering the same three questions of what is an MLP, how can I use VectorVest to find the best MLP at the right time, and what is the track record of this trading system. Now we're really going to spend time focusing on question number 1 and question number 3. We're going to dig a little deeper into the workings of a master limited partnership, and we're also going to dig a little deeper into the track record of the trading system that we had originally outlined. So first, let's review. What is a master limited partnership? Well, it's a publicly traded security with the liquidity of a stock and the tax benefits of the limited partnership. For a company to qualify as an MLP, they must receive 90% of their revenue from what the IRS deems a qualified source. Now, there's all manner of these qualified sources. One of the main ones is anything related to the production, the processing, extraction, or transportation of oil, natural gas, and coal. Some of the primary advantages of investing in an MLP is they do pass through income. There is no federal or state tax at the company level, which effectively lowers the cost of capital since there's no double taxation of dividends. The MLP's tax is passed on to the shareholders, and you'll have to file a Schedule K-1, and the individual reports their share of the MLP's income at their own rate. And this will be the first time that I point out our disclaimer at the bottom that if you have questions, please consult a tax advisor regarding investing in MLPs. That pass-through income comes in the form of distributions, which are unlike dividends in that they're not taxed when they are received. Instead, they are considered reductions in the investment's cost basis and create a tax liability that is deferred until the MLP is sold. So investors essentially receive a higher cash payment than the amount on which they are taxed, which creates a very efficient means of tax deferral. One of the more common questions we received was, should I hold MLPs inside of my IRA? And you are allowed to, however, there's some special considerations that should be looked at carefully. Since an IRA is already tax deferred, the tax advantages of an MLP could be looked at as wasted. So once again, when investing in MLPs, we are going to ask you to consult your tax advisor. In summary, MLPs are ideal for investors who are looking for current income and tax deferral with a bullish exposure to the natural resource and oil and gas industry. Now let's take a look at how we can find these investment vehicles in the VectorVest program. Here in VV7, we are in the Viewers tab, and under the Watch List section, I've opened up the Special Watch List folder, and we're looking at the one we have titled Master Limited Partnerships. It has 121 different symbols in there, and we have them sorted by VST. So this is the first time VST is going to come into play with investing in MLPs. So what we originally did was build a custom search which looked exclusively at this watch list. So moving into the Unisearch tab, saved under My Long Searches, we have the same search originally used at the end of May, which is titled MLP. The first parameter for this search is that the stock watch list must be equal to Master Limited Partnerships. Secondly, the dividend yield must be greater than or equal to 4% annually. And on top of that, we want the YSG, which is the yield, safety, and growth vector, to be greater than or equal to 1. And the second time VST is going to come into play here is this list will be sorted by VST plus YSG. So we run the search as of the current time frame, and we will see a list of symbols all coming from that particular watch list. Now we have to put this search to the test. Originally, and you can go back and watch the video from May 31st, we looked at a 1-year, a 5-year, and a 10-year test. Tonight we are going to focus on just the past 1 year, as we are going to dive a little deeper into the income production. So first we'll go into the back tester, and we're looking at the results of the original test, which used confirmed calls as a timing system, began at the end of May 2012 through the end of May 2013, and our original $100,000 portfolio had grown to $127,600. Well, that is, of course, a 27.6% total gain. That came at the low cost of $656 in commissions, and our drawdown was a very nice 4%. So this portfolio originally entered the market in August of 2012 through the end of October and made about 6%. Sat in cash for a few months, got back in December and rode that all the way to April, taking it up to about 24%. Went to cash for a few weeks, and at the time of recording, we were still in a confirmed up, and this portfolio was long with 10 holdings. So what we did is took this same test and updated it through Thursday the 18th time frame, and you can see our total gain loss has come down by about 4%. We have more commissions because we have had both a confirmed down and the confirmed up that we're currently in since the end of May, so we have bought and sold some MLPs. And right now this is long also with 10 holdings, all purchased right after the confirmed up, which was issued on July the 5th. So overall, things are still going very well for the year with nearly a 21% ARR. And instead of just making the assumption that all of these MLPs paid us the 4% as dictated by the search, what we did is we went ahead and took a look at every single transaction. And as an example, we purchased 312 shares of FUN at $31.98 on August 7th of last year. We held those shares all the way till October 23rd, where we sold them all for $35.39. So we made a little bit of money just on appreciation. On top of that, FUN paid a distribution of 40 cents per share, multiplied times our 312 shares. That gave us $124 back in August of 2012. So we did that same process with every transaction found here, and this table shows the results. The first column is the symbol of the MLP that traded inside of our portfolio. Next is the number of shares we owned, investing an average of our portfolio value. Here's the amount of the distribution. Here's the date paid and the total income, adding up to $4,965 over the past year. And again, that $4,900 is subject to those special tax rules discussed earlier. Well, another way you can look at that is an additional 4.9%. Adding that on to the 23.5 we've earned just through capital appreciation, we are over 28, closer to 29% as a total return. And looking back at the 10 holdings that are currently in the portfolio, if we change to a watch list view and highlight all of them, we can look at the upcoming dividend dates. And you can see that as of today, Friday the 19th, CODI is going ex-dividend. We currently own that in the portfolio, so we're due to get paid from that one. The next one is due on July 31st. Symbol PAA is going to go ex-date. So looking at PAA, as long as we remain in a confirmed up and this VST remains above 1, will be scheduled for that payment. I bring up the VST because this is the third time it's appeared with our strategy tonight, and that we used a VST of less than 1 as our stop criteria. So we will hold any of these positions as long as the VST is above 1. Well, I hope this sheds some light further for you on MLPs. If you have any questions about the VectorVest portion of tonight's presentation, please call us at the number on your screen. Thank you.